5 a.m. in New York City. I'm Bonnie Quinn. Good morning. Here's your Bloomberg Brief and what you need to know. Healthcare talks. President Trump showing willingness to negotiate with Democrats. Senator Schumer says we'll be there. The rally taking a breather potentially today. Equity futures edging lower after chipmakers push stocks to fresh all-time highs. And Citadel's Ken Griffin calling the rush to gold concerning as the precious metal hovers just below $4,000. So we say taking a breather, but let's take a look at these futures because they are down very, very fractionally from records yesterday. Another 0.4% for the Nasdaq 100 after a bunch of deal making. Basically, AMD making a deal with OpenAI, and then OpenAI's Investor Day mentioning a bunch of companies that just took off in the session. Now they ended well off their session highs, but it does speak to a little bit of froth in this market. Russell 2000 futures also pointing to perhaps a bit of a breather today. Don't forget, we've had 7 up days in a row for the S&P 500. Now, the bond universe, we are where we roughly were yesterday, up about a basis point there on the 30-year yield. Interestingly, abroad is where it's at with the bond universe today once again. More pressure on France. At the same time, Kit Jukes today saying we are well off where we were for those peripheral spreads during 2010 to 2015. It is, though, having an impact on the euro, which is weaker and remains weaker today, well below 117. We're keeping our eye on the yen as well. All right, let's get across now to some individual movers. And in London, we have Valerie Titel. Valerie.
Good morning, Bonnie. Let's start with AMD because the rally didn't end with yesterday's 24% move. It is continuing in the pre-market with AMD up another 2.5% after this deal that they struck with OpenAI. It did prompt an upgrade from Jefferies, who they're citing a 50% price target gain for this stock. They think it can reach $300 a share, citing that this deal with OpenAI really verifies AMD's attempt to break into NVIDIA's market share when it comes to their dominance around AI accelerators. So the positivity still going on for AMD. But let's move over to the earnings picture. We did hear from Constellation Brands. They're in the beer industry. They sell popular brands like Modelo and Corona, citing some decent beer sales in their earnings. Those shares are up 3%. Now, these shares have fallen 30% year to date, Vonnie, on the back of a generational shift away from beer consumption. And very interestingly, the company did cite weakness in more Hispanic-tilted zip codes, possibly showing that Trump's immigration policies could weigh on one of their key customer bases in the future. Lastly, let's end with critical minerals and rare earths. Trilogy Metals absolutely soaring in pre-market, up 180%. This comes after the U.S. has taken a 10% stake in the company to unlock some rare earth mining projects in remote Alaska. But Vonnie, yet another example of the U.S. government taking direct equity stakes in these miners in order to combat China's dominance in the rare earth sector. Bonnie?
Yeah, you have to wonder if it will work. Valerie, thank you so much. Valerie Titel there for us in London. And later this hour, we're going to be speaking with Marvin of State Street, who says Fed easing will be supportive of equity markets even at these stretched valuations. First, though, the latest on the government shutdown. President Trump opening the door for talks with Democrats.
We have a negotiation going on right now with the Democrats that could lead to very good things. And I'm talking about good things with regard to health care.
Senate Democratic leader Chuck Schumer responding in a statement, writing this, quote, Trump's claim isn't true, but if he's finally ready to work with Democrats, we'll be at the table. For more, I'm joined by Bloomberg's Stephanie Baker. Stephanie, there was some confusion as to whether these talks could take place while the government is shut down or only after it reopens. Any chance that there will be talks before the government reopens?
Well, that is Trump's position and the Republicans' position that they can't have any talks on this until the Democrats vote to reopen the government. And the Democrats are holding firm, saying they want to have talks about extending these health care subsidies before they agree to this continuing resolution to reopen the government. And what Trump said yesterday wasn't true. There were no official negotiations going on. There are informal talks happening between Democratic senators and Republican senators. Whether or not that's going to reach a breakthrough, I think, remains to be seen because both sides seem really dug in.
Yeah, I mean, we had a fifth failed vote in the Senate to pass a stopgap funding bill that would keep the government open until November 21st. Is that what happens now? We just keep having these votes?
I think so. At the moment, the House has not come back to Washington, so they can't negotiate an alternative with the House. And they're going to keep putting this vote to the Senate, hoping that some Democrats will cave and switch sides. However, I think the stakes are pretty high. These subsidies are very popular with the voters, including in Republican states. So I think that the Democrats feel that they've got the upper hand here. But I think there's going to be increasing pressure on those Democrats. They need a handful to switch sides to pass this continuing resolution and reopen the government.
Stephanie, we're into the first full week of the shutdown, day 7 now, including the weekend. Do we have any polling on the shutdown yet, or, what the public thinks of it?
The polls so far seem to be blaming Trump and the Republicans for this shutdown. But the shutdown itself is not popular. I think the latest poll that I saw from YouGov and CBS showed that something like 40% of voters think it's not worth having a shutdown over. So I think this is still a moving target. The messaging wars are continuing. But again, as people get word of their healthcare costs rising, as paychecks to government workers and the military get interrupted over the next 5 to 7 days, I think that's going to hit home, and that could shift public opinion considerably.
Stephanie, it did seem like Trump was changing his stance a little bit on the healthcare issue, whether it be the ACA subsidies, which are set to expire at the end of the year, or, something on the cuts to Medicaid. Is he serious? Would he consider doing something on 1 or 2 of those issues?
Well, he walked back his comments in the White House yesterday. I think there's some question about whether or not he really fully understands what's at stake here. And there's been some reporting about a realization within aides in the White House about how stopping these subsidies could hit their voters in Republican states at the midterms. Like I said, his biggest issue is cost of living and inflation, where opinion polls show him underwater, that voters believe that he is not really taking on the issue of bringing costs down. So as soon as these subsidies get taken away, and some people are receiving letters saying that your premiums are going to go up, I think that could shift the debate somewhat. But for now, he's digging in his heels, so we could be in this for quite a while.
Stephanie, thank you so much. That is Stephanie Baker for us. Thank you. Over in France, meanwhile, President Emmanuel Macron giving former Prime Minister Sébastien Lecornu a chance to salvage the government through negotiations with other political parties. Now, Lecornu had resigned yesterday, but now has until tomorrow night to stabilise the nation's politics. Bloomberg's Caroline Conan joins us now from Paris. Caroline, what can Lecornu achieve within the next 48 hours that he wasn't able to achieve while he was properly Prime Minister before his resignation?
He's outgoing Prime Minister now, but he remains as a caretaker unless someone else takes his place. And of course, he's got until tomorrow night to find some kind of solution with the opposition parties, because even the Republicans who were before within Macron's camp have now left the boat. So today he is meeting with what is left of the center, also meeting with the Republicans at a later time, a separate meeting, and of course with the socialists at some point before tomorrow night. The socialists who are still hoping that Macron could pull one more card, which is naming a socialist left-wing prime minister. But of course, President Macron's options are now very limited. You can see the front pages on the French papers this morning. He is back against the wall. He doesn't have many options left. He could also call, of course, snap legislative elections, which is at this stage the most likely option. And he could, and that's another option, resign and call early presidential elections, which is actually something that now some people within his own camp are calling for, including the former Prime Minister Edouard Philippe, saying we should perhaps see some caretaker Prime Minister doing a budget before the end of the year and then early presidential election. But the least we can say is that Macron is more and more alone. You see this other front page with the Élysée Palace where Macron is saying, is there anyone there?
Yeah, gosh, very, very illustrative of what's going on. Now, betting markets are saying that parliamentary elections are the most likely next step. But as you say, calls are growing for Macron to resign. But we won't get a budget in any case by October 13th. So does the government end up shutting down in January?
There is no shutdown like you see in the US, because in France you have a system called the special law, which allows you to roll over the 2025 budget into next year. This is exactly what happened last year when Michel Barnier, former prime minister, a couple of prime ministers ago, had to resign after losing a vote of confidence in December, which was too late to pass a budget. So technically, in terms of public finances, this would be good news in the short term, because that means like none of the public sector salaries or pensions or wealth system would actually increase on inflation, wouldn't be indexed on inflation. But obviously in the long term that means no structural reform, and current outgoing Prime Minister Le Cornu has warned that if there is no budget in sight, then the deficit could reach 6% of GDP in France next year, which will obviously be very high. And the MEDEF vice president actually said today, this is France's biggest business lobby, that the current political uncertainty has already cost French companies about 9 billion euros of GDP. So of course, this uncertainty is weighing a lot on investments, hiring plans, and even spending, because the French people would rather save at the moment than spend their money because of this uncertainty.
Exactly. It's the typical reaction. And the market reaction, as many analysts have pointed out, so far has been pretty orderly, but that could change. Caroline, thank you so much. Bloomberg's Caroline Conan in Paris. Now to other top stories trending on the terminal this morning. Sticky inflation in the United Kingdom gives Chancellor Rachel Reeves a rare lifeline. According to a new analysis, higher prices are likely to give a net £5 billion boost to Reeves' budget plan by lifting taxable incomes and profits. Reeves will unveil her budget November 26th. The IEA slashes its forecast for US renewable energy growth by 2030 in half. The cut is driven by policy changes under President Trump. Those include the early phase-out of tax credits for clean energy installations and suspension of new offshore wind leases. Sources say Tesla plans to unveil a cheaper version of the Model Y today. The move is meant to counter the loss of US incentives for EVs. Tesla started teasing the new model in social media posts over the weekend. Coming up, sounding the alarm on the rush to gold. We'll bring you our conversation with Citadel CEO Ken Griffin next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. America on a sugar high. That's Citadel CEO Ken Griffin's take on the current economic state. He sat down with Bloomberg's Francine Lacroix in a wide-ranging interview at the Citadel conference in New York. Have a listen.
The Trump administration is very much aligned with seeing the success of the American worker. So a number of the policies that are being effectuated really are about the average American family feeling that life is better and working better for them. This backdrop is fueling much of the enthusiasm that we see in markets in the United States. And then, of course, we're on a program of both fiscal and monetary stimulus that you would expect to see in the middle of a recession. We're seeing right here, right now, in a period of near full employment several years into the business cycle. So we're definitely on a bit of a sugar high in the U.S. economy right now.
So broadly, have markets moved away from the tariff issues?
The tariff issue is pretty much in the rearview mirror right now from the perspective of the market day in, day out. Now, the issues that relate to tariffs, in particular high inflation, are yet to be resolved. There's a sense of almost inevitability that the inflation genie is going to go back in the bottle. But I think that's a very premature conclusion. If you look at both the immigration policies the fiscal policies and monetary policies, it's a very pro-inflationary environment. And I think the markets are just way too calm about the prospects of a substantial move higher in inflation.
Is the Fed right to focus on the jobs, the labor market, instead of inflation?
So I think that is a really interesting debate. And I remember when Janet Yellen became the chair of the Fed, she had a very simple framework that she thought about. She thought about the fact that the U.S. had gone through one significant recession and the risk of another recession and the ensuing job loss and human capital atrophy that would go with a second adjacent or nearby recession would be incredibly damaging for millions of Americans. You lose your job twice in just a few years, you really do become separated from the broader employment market. And that was the lens through which she made a number of decisions to be, in both at the time and in retrospect, reasonably dovish in terms of managing interest rate policy. Right here, right now, I think that argument's is a bit hard to reach. And the Fed's trying to make a decision between buying some downside protection on the labor market and managing inflation. And I think they're making a decision that puts them at risk if we do see inflation reaccelerate early into 2026.
Is that what you're expecting, a reacceleration in inflation? And why has it not played out like many people thought that inflation would be higher?
I mean, we're still well above target, right? I mean, like, let's just cut to the chase. Inflation is substantially above target and substantially above target in all forecasts for next year. I mean, it's part of the reason the dollar's depreciated by about 10% in the first half of this year. It's the single biggest decline in the U.S. dollar in 6 months in 50 years. Gold is at record highs. And the appreciation in other dollar substitutes, to use that word loosely, in items like crypto, for example, is unbelievable. So we're seeing substantial asset inflation away from the dollar as people are looking for ways to effectively de-dollarize or de-risk their portfolios vis-a-vis U.S. sovereign risk.
Are you really seeing that?
No, just check the price of gold.
Well,
I mean, I don't have to look very hard.
That's a life of its own. It's a life of its own, gold.
No, but it's a life of its own as you see sovereigns around the world, as you see central banks around the world, as you see individual investors around the world go, you know what? I now view gold as a safe harbor asset in a way that the dollar used to be viewed. That's what's really concerning to me. And there's been plenty of published research in recent weeks, months, about foreign investors now, when they buy U.S. equities, hedging the returns back to their local currency. So that, again, is a bifurcation of I'm going to bet on American business, but I want to immunize some of my sovereign exposure to the United States.
Can the previous panel was talking about the shutdown. Given where we are in the shutdown, can the Fed properly do its job at the end of the month in these circumstances where we may not have enough data?
I don't think the data over a few weeks should really be that determinative to the Fed. I mean, that sort of overgrandizes what the impact or importance of that data is, particularly with the sampling errors that's intrinsic in how that data is produced and compiled for the Fed. Like, I just think that's a bit of a misplaced warrior concern.
Citadel CEO Ken Griffin there speaking with Bloomberg's Francine Lacroix in New York. Coming up, a new CFO for Elon Musk's XAI. And look at what else is making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the FT reporting that Elon Musk has appointed former Morgan Stanley banker Anthony Armstrong as the new CFO at XAI. The move marks the latest shakeup in Musk's executive ranks. Armstrong was a senior advisor in the Trump administration during Musk's Doge cost-cutting efforts. Next up on the Washington Post, the Trump administration's announcement of the new head of the IRS. The agency will be run by Social Security Administration Commissioner Frank Bisignano. He will run both agencies. The move sidesteps a potentially lengthy Senate confirmation process to fill a leadership vacuum at the IRS as it prepares for filing season. And on the New York Times front page, Israel and Hamas met with mediators in Egypt as Israelis prepare to mourn 2 years on from the October 7th attacks. Some relatives of hostages gathered outside Prime Minister Benjamin Netanyahu's residence for a prayer service and a call to end the conflict. Many Palestinians in Gaza see President Trump's proposal as the best hope after nearly 2 years. Quick look at how markets are faring then as we approach the open in the US. S&P futures fractionally lower after 7 up days. Want to point to the dollar index because we were seeing the euro weaker today. We're seeing the yen weaker. It is approaching 151 and sterling also weaker. And the 10-year yield just back up a basis point to 416.37. Coming up, we'll catch up with Marvin Lowe of State Street. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Healthcare talks. President Trump showing willingness potentially to negotiate with Democrats. Senator Schumer says we'll be there. The rally potentially taking a breather. Equity futures edging slightly lower after chipmakers push stocks to all-time highs. And Citadel's Ken Griffin calling the rush gold concerning as the precious metal hovers just below $4,000 an ounce. And that's where we stand with those markets just pointing to fractional declines at the open. But again, look at the Nasdaq. It's unchanged at this point for futures. We had a gain yesterday once again, 7 gains in a row now for the S&P 500. Let's look at the bond universe. Not too much change in the United States. We are seeing pressure in France in particular. We're also seeing movement in Japan, the two hotspots around the world right now. And that is putting pressure on the euro in particular. It's trading below 117 and on the yen trading very close to 151. Let's get to some individual stocks to watch now. In London, we have Valerie Titel. Valerie.
Good morning, Vonnie. Let's start with AMD. That rip-roaring rally of yesterday is continuing in pre-market trade. Advanced Micro Devices up another 3%, adding to their gains of yesterday on this deal with OpenAI. They were upgraded at the close by Jefferies. They are citing a 50% price gain. They think this stock can go to $300 a share, citing that this deal with OpenAI really validates their push into those AI accelerators to challenge NVIDIA's dominance in that space. Well, let's also talk about earnings. We still have some to mention. Constellation Brands, this is the owner of beer brands such as Modelo and Corona, citing some decent beer sales in its earnings release out late yesterday. Those shares are up 3% in pre-market trade. Now, these shares have declined 30% year to date. It's been a tough year for the beer industry as this generational shift away from beer drinking has hurt their bottom line. But interesting enough, they did cite some surprising weakness in their more Hispanically tilted zip codes, possibly suggesting that Trump's tough immigration policies are affecting one of their key consumer bases. Lastly, let's keep up with what the Trump administration is doing. They have announced a 10% stake in Trilogy Metals. We're seeing shares of Trilogy Metals up 165% in pre-market trade. Vonnie, now this is another move by the Trump administration to try to get into the rare earths. The purchase or the investment in Trilogy Metals will help the U.S. invest more heavily in some remote Alaska mines when it comes to those rare earths. But keep an eye on those Trump administration and their investments. This is like now the third investment they've made in a rare earth miner recently with Lithium Americas of the last 2 weeks. Bonnie?
Yeah, absolutely, Valerie. We definitely will be chalking that down on the Excel spreadsheet. That's Valerie Titel there. Well, successive record highs for global equities coupled with records for gold and Bitcoin have some prominent investors sounding words of caution. State Street's Marvin Lowe weighs in, writing that institutional investor behaviour has retained the positive bias despite the growing list of uncertainties. I'm pleased to say Marvin joins us now. He's senior global macro strategist at State Street. Why is institutional bias positive, Marvin, even with all of the challenges that are out there and the uncertainties?
Yeah, absolutely. I mean, first and foremost, investors got this right in April in terms of really expecting, if you will, a Liberation Day to have an incredibly negative effect on growth and ultimately earnings, and that hasn't happened. And I think that if we frame everything from the perspective of what we're investing in and the cash flows that they've been able to generate, even through this uncertainty, you have to believe that corporate America is able to navigate these incredibly treacherous waters, even if it does have some knock-on effects to data, which creates a degree of concern. But that concern really hasn't made its way into the actual earnings power and cash flow powers of a lot of these investments.
You know, margin debt has soared 33% from a year ago. It's at a record now, about $1 trillion. You know, there are people out there, Paul Tudor Jones was one of them yesterday, for example, pointing to this. We're also seeing leverage loan prices dropping, auto loans faltering and so on. Are there places of fragility out there that make you a little bit concerned?
Oh yeah, for sure. I mean, valuations make every day, a challenging world to kind of view from a lens of being somewhat risk tolerance and not, at the risk of seeming to put one's head in the sand. You're always balancing those aspects, and I do think that that's why the Haven discussion, that's why the gold discussion continues as strong as it is, even as you kind of see these record levels make their way through across most of the risk markets.
Yeah, and I did want to ask you about leveraged ETFs as well, Marvin, because you see it all at State Street. Are they going to be part of the next crisis?
You know what? History tells us that that's where a lot of the fires start, if you will. Certainly leverage provides both positive aspects when things are working the right way, but history has shown us that that's where a lot of the risk first starts.
You mentioned gold just a second ago, and I want to play you something that Ken Griffin told Francine Lacroix yesterday. He was talking about substantial asset inflation away from the dollar. Let's just have a listen to what he said first.
As you see sovereigns around the world, as you see central banks around the world, as you see individual investors around the world go, you know what? I now view gold as a safe harbor asset in a way that the dollar used to be viewed. That's what's really concerning to me.
Marvin, are you as concerned as Ken Griffin about the state of the dollar and how investors are looking beyond it for safety now?
Yeah, for sure. So it hasn't necessarily made its way through, let's say valuations in the fixed income market the way one would have painted if things were moving quite quickly. And that's somewhat understandable because, these fixed income markets are complicated and they're based on decades of, really correct policy allowing for them to pay in a way that has contained inflation. Now you've got all of that really at play at the same time. In the inflation story we know, we continue to see, most recently over the weekend with France and Japan, just how difficult this fiscal stability discussion is. And the currency markets are one where a lot of that pressure ultimately comes out from a concern perspective, both at the long end of the yields as well as the currencies. That's telling you that there is this ongoing concern. It might not result in significant changes in broad valuation in the short term, but longer term, one has to really consider what their asset allocation approach to this kind of potential regime change that's very different than what we've seen over the last 10, 15 years.
So do you see gold going higher then? Do you see Bitcoin being part of this story, or is that moving for its own separate reasons? And also the yen carry trade, if I can just lump them all in together and ask you, do you see all of those trades continuing?
Yeah, I mean, so gold as a hedge against a lot of concerns makes sense to me. Crypto has a lot of those same aspects. I'm not necessarily a crypto expert, but thematically it does fit into it. It is a little bit juiced, if you will, given kind of the approach of the administration to that. And, as volatility and can go both ways, to me, it seems easier to ultimately try to hedge against those concerns with gold. And in terms of the other parts of the market, again, it's hard with current valuations, but everything is still lined up with a Fed that is supportive from a financial conditions perspective to really continue along with what has worked. And, that momentum, if you will, is still somewhat strong in the market.
So, Marvin, I know you think that these, insurance cuts will be done by the end of this year, and you're looking for, 2 cuts by the end of this year, 75 basis points more in total, I believe. Will that be enough for a next Fed chair?
So, I'd say that October for me is locked and loaded. I still think data can influence December. The bigger story, however, is if I'm right that there's only 75 basis points in total, if you will, before everything's done. That's anywhere between 50 basis points more, or at times 75 basis more than what the market expected. That's kind of the broader story. The next Fed chair, if in fact they are able to remain independent, to the degree that, let's say I view Chair Powell as approaching the market, that might be enough. We've kind of seen how the administration would like this to go, and clearly talking about a 3.5% funds rate once we're done with this is not something that the administration would ultimately be happy with.
Marvin, hope to talk to you again very soon. Always a pleasure. Marvin Lowe of State Street. Now, to other top stories trending on the terminal this morning. Carlyle is filling the void left at the heart of U.S. economic data during the shutdown's blackout of Tier 1 reports, according to the investment manager. It shared a grim read on the labour market, estimating that only 17,000 jobs were created in September. That would be among the weakest results since the U.S. emerged from the 2020 recession. French President Emmanuel Macron gave outgoing Prime Minister Sébastien Lecornu until Wednesday night to negotiate with France's political parties in a last-ditch effort to salvage the government. The decision gives Macron more time to decide his next steps, which could include fresh legislative elections. It's not clear what Macron will do once the Wednesday deadline passes. The IEA slashed its forecast of U.S. renewable energy growth by 2030 in half. The cut driven by policy changes under President Donald Trump. Those include the early phase-out of tax credits for clean energy installations and the suspension of new offshore wind leases. Coming up, the shutdown drags on. President Trump says he's willing to talk to Democrats. Senator Schumer denies Trump is. More next. This is Bloomberg.
We have a negotiation going on right now with the Democrats that could lead to very good things. And I'm talking about good things with regard to health care.
The shutdown impasse dragging on as Senate Minority Leader Chuck Schumer responds to the president's claim, writing, quote, Trump's claim isn't true, but if he's finally ready to work with Democrats, we'll be at the table. Bloomberg's Stephanie Baker is back with us. So, Stephanie, President Trump said that there were negotiations ongoing. Are there?
There are no official negotiations happening. The last time Chuck Schumer met with Trump was last week. Now, senators have said that there are unofficial negotiations happening and talks, between Democrats and Republicans. But short of a meeting with Trump in the White House to try to resolve this, I think it's going to continue for some time. It looks like a vote is going to be put to senators, again, to try to to break this impasse that they've hit. But I think it's going to drag out for a considerable period of time as both sides really dig in their heels.
Trump did say that, he wanted to do something on health care. Does he mean it? Because if he does, this would be a shift, right?
It would. I think there's some question mark as to whether or not he really understands what's at stake here. These healthcare subsidies are incredibly popular with voters at large, and taking away these subsidies will hit his voters in Republican states and potentially affect the outcome of the midterms. So, I think there is more at stake here than perhaps Trump realizes at this point. But he has not put forward any concrete alternative. The Republicans have been trying to kill the Affordable Care Act for years, but they haven't really put forward an alternative.
Yeah, and we've had 5 failed votes in the Senate now. Trump later said that he was only going to talk once the government was reopened. There's no sign of that. So let's talk about the shutdown. We're into day 7 now. How is it playing with voters? Do we have polling and so on?
Yeah, the polling that I've seen indicates that a majority, perhaps a slim majority, blame Trump and the Republicans for the shutdown, but that something like 40% of voters think it's not worth having a shutdown over. I think this is going to potentially shift in the days to come. One deadline that I've been looking at is October 15th, when the U.S. military are due paychecks, and whether or not those come through, that could potentially shift public opinion, and as the shutdown drags out and people struggle with not having a paycheck, I think that could undermine support for continuing this. I think there's going to be increased pressure on Democrats in the Senate to switch sides and vote to continue funding the government. Trump has said he will not reopen negotiations until they vote for this continuing resolution to reopen the government. Democrats are digging in and saying, we want you to promise to extend these subsidies before we agree to the budget vote.
Yeah, Stephanie, thank you so much. That is Stephanie Baker there. Turning to autos, Bloomberg learning that Tesla is planning to unveil a cheaper version of the Model Y later today. Let's go straight to Bloomberg's EMEA managing editor for global business, Eric Fahner. So, Eric, this was teased over the weekend. We were wondering what was coming. Why is Tesla making this cheaper model?
Yeah, morning. So it's a combination of factors, really. One is simply that they haven't had a lot of new product recently to introduce since the Cybertruck a couple of years ago. That model hasn't sold particularly well compared with some of the other Tesla models, and so there's a bit of dearth of excitement there about the current lineup. And then you combine that with the loss of the $7,500 federal subsidy that for EVs that expired at the end of September. And suddenly a Tesla looks a lot more expensive than it did, just a few weeks ago. So they've decided to, it looks like they're going to introduce a new Model Y that's a bit of a stripped back version that would kind of close some of that gap.
Yeah, I mean, I thought we were just out of a price war on EVs and that Tesla had been slashing its prices anyway. So what does this new, even cheaper Model Y cost? And what do we know about those things that people will have to do without for this cheaper model?
Yeah, so we don't know the exact cost at this point yet, but I mean, the talk has been something around on the order of like 20% less than the current version. So that would put it, potentially more in the $40,000 and up kind of range, rather than, a good bit more than that. That obviously makes it more competitive with, pretty much every manufacturer that's out there has competing models now in the growing EV space. You've got, in some markets, like over here in Europe, you've got a growing influx of Chinese EVs too that are more competitively priced. So it definitely gives them more, to offer there. In terms of what they won't offer in the car, some of it is just more luxurious features, will be stripped back, and there'll be simpler materials and that sort of thing. Some of the bells and whistles, yeah.
Yeah, it'll be fascinating to see, because we did see deliveries pick up in the second half of the year. So, you wonder if this will have an impact. And especially you say it's going to be around 40,000, maybe that 20% reduction would be just about the EV credits. So do people want a Tesla? It's literally going to be, a vote on whether people want their Teslas, whether they're EVs or not, right? It's the subsidy won't make any difference at this point. Who will Tesla be in competition with at that price point?
Yeah, it's a lot of the mainstream manufacturers now. It's pretty much everybody in the U.S. Obviously, the domestic players and Japanese to a large extent. Over here in Europe, it's maybe a little bit more some of even the Chinese manufacturers that have been pushing in with lower prices. So it's a growing market. I mean, that's one of the problems for Tesla is that there's just a flood of models coming into that space.
Yeah, absolutely. Eric, thank you so much. Eric Fahner there for us. Turning to gold now, hovering just below that $4,000 mark. This is Goldman Sachs raises its gold forecast. It now sees gold at $4,900 by December of next year. That's up from $4,300, which was its previous forecast. Morwenna Coniam of Bloomberg Markets Today joins us now. What will take us there? Just continued momentum, Morwenna?
Well, yes, we've been seeing it rise exponentially so far this year, up 50% since the start of the year. And there's been a bit of a pause this morning because one of the factors that's been pushing the gold price up is actually that the dollar's been struggling with other sort of traditional haven bid, and that's been catching a bit of a rebound this morning. I think what will be key, therefore, to the future trajectory will actually be what happens with the uncertainty around the US government. There are signs that the shutdown could come to an end, and then we'll have US data which could change market bets on what's expected from the Federal Reserve, and that could have an impact for the dollar and then consequently on gold. We've also seen, gold price being pushed up by a lot of buying from central banks, just amid the uncertainty that we've seen this year to do with the trade policy from the US. And that signs that maybe that could sort of be pausing slightly, but it's still, seen as quite attractive as a haven. And we've also got political uncertainty now in France. And so this sort of appeal of having a asset that isn't affected by that is very strong still. So perhaps we're coming to a slowing in the gains, but there's not really any great sign that the overall momentum is dissipating.
Morwenna, thank you so much. That is Bloomberg Markets Today co-editor Morwenna Coniam. Coming up, Fed Speak and an exclusive interview that's in your day ahead next. This is Bloomberg. Now a look at what's ahead today for your Tuesday session. First up, we do have some earnings from McCormick & Co. coming before the bell. Then Fed Speak on deck, lots of it, with Bostic, Bowman, Myron and Kashkari all speaking throughout the day. And don't miss our exclusive interview with JP Morgan CEO Jamie Dimon. That's at the JP Morgan Tech Stars Conference in London. Let's take a look at some pre-market movers now. AMD adding to yesterday's gains after surging on that OpenAI investment. Constellation Brands, of course, had its earnings yesterday, extending post-earnings gains after strong beer demand helped the drinks maker top sales estimates. It was a little bit of a surprise. And then Oscar Health, look out for healthcare stocks today. It's up 9%. Obviously, President Trump said he would negotiate with Democrats over healthcare subsidies, and that may move healthcare companies today as well. Let's take a look at the macro picture because we're dealing with a lot of uncertainty and 7 straight days of gains for the S&P 500. Will those gains be arrested today? Well, we're down very, very fractionally for futures on the S&P. Dollar strength continues. We'll talk about that in a second. The 10-year yield, not much movement there, up a basis point. This is why the dollar is strong. If we look at the yen, we are trading at 150.75, very close to 151 now, and the euro weaker at 116.65. Trouble continues in France. Surveillance is coming up. This is Bloomberg.